Yo, what's going on YouTube? Welcome to a brand new video. We're going to be breaking down another trade setup that we took a couple days ago. This week we're actually 3-0. You're going to see all of those setups broken down on the channel. This is the first one that we're taking, right? I uploaded a video a couple days ago. You guys are going to want to watch that. Quick little vlog in the beginning, and then we talked a little bit about trading. Pretty cool. Gymshark event too was pretty dope. So this was a beautiful trade, right? And right now I'm going to go to the actual setup. But this trade actually dealt with a key setup that I like to use, and it's not a set, it's a setup, right? But this is a continuation model right here. This is right. So this is where in those instances where when price is clearly in one direction, there's a clear draw, and what does that even mean? What I mean is, if there's if the price is just from the the time market opens, it's just melting. And from the time that price is, I ended up finding the setup now, and by the time that price is market open, and it's just blowing up with little retracements and just continuing to push up, and it's just such a clear what day it's gonna be. Like this day right here, like this was shorting all day, right? So you could have caught a continuation trade within here once you establish and once you realize that price was just gonna continue to go bearish. That's kind of what happened here. You're gonna see right here that we're actually gonna open up on Tuesday, right? We're gonna go down over the Tuesday, and we're gonna go to 6 in the morning right here, right? So this is what we have right here. We have resting buy side and resting sell side all the way down here. What I also like too is that price left an imbalance right here, an H4 fair value gap to be precise, right? Price left an H4 fair value gap right here. I'm labeling it like this now, so when you guys actually see the videos, you guys can actually see what I'm talking about. Usually I just draw things and you guys, I kind of just forget to tell you guys what they are. But going into session, right, I have a lower high being made. I have an inverse fair value gap right here. And what really sold this setup, right, was actually liquidity itself, right? So we're going to continue and skip, and we're going to go all the way over here to actually, 8 o'clock, 9 in the morning, right? So this is 9 in the morning. Now what we're going to do is push to 9:30, right? So when 9:30 comes, right? So when 9:30 comes right here, okay, what I'm seeing right here is buy side, buy side, buy side, buy side, right? So I was very sure that we were going to sell off once price actually tapped into this fair value gap and wiped out all of his buy side, right? Was I right? Was I wrong? I was definitely wrong, because what this ended up being was a turtle soup model, right? Price did not continue to go to the downside. That's what I wanted to catch. I wanted price to push up here, right, and continue to sell off, right? So by the time price opened at 9:30, price actually started longing from here, and it all started with a turtle soup setup. Price turtle soup and swept these London lows over here, right? And then price created a fair value gap. Price inverted that fair value gap, right? Price inverted that fair value gap, and then price continued to go long. Now here is where I actually tried to go short. This is where I'm going short, and I'm looking for any type of fair value gap to form for me to actually take a trade based on, right? And I had nothing here, right? I had absolutely nothing, and I went in and I believe I took a short and rolled the stops immediately to break even, and I can actually show you exactly where that was. And that was when price started to break these levels over here, right? Once price started to break these levels over here, I took an impulsive short. Price dropped all the way down to here. I thought we were gonna close, and price gave me the nastiest wig. I got out like negative $100, and then this is where the actual continuation chart set up. Then price started to break above and close above all these liquidity levels and this H4 inverse fair value gap. So what am I gonna say now? Cool, this is where my continuation model comes. I only take a minimum 5 or 15 minutes trade setup, right, to continue and move, right? Nothing lower. So here, what I mean by that is the first fair value gap that presents itself on the 5-minute or 15-minute, whichever comes first, that's the one I'm going to trade off of, right? And then I get it right here. I finally get it. So now I'm going to go down to the 1 minute time frame. I'm going to simply wait for price to tap into this fair value gap, right? And I'm going to target for only a 2-1. That's one of my rules with this trade setup, that I'm continuing a move on its third displacement. So there's no point in holding for the, in reaching for the moon. Price taps in, triggers us in, and then price immediately pushes up. And that was a quick 2-1. I'm in the market. I'm literally in the market for 9 minutes and made $500. This is a beautiful setup, quick setup, where you just have to know what you're looking for and you have to have patience, right? This right here could have been a really bad loss. It got chopped up when you just wait for price to push up here. Once it's closing above all these levels, this is what I mean where the bias is clear, right? It's just going to keep pushing up despite all these liquidity levels in H4 fair value gap. Price is going to displace above, create that fair value gap. Whichever comes first, I actually end up just taking the buy limit off of that. If I lose, I lose. And if I win like this, it'll be a quick, nice win continuation trade. That's one of my favorite setups. I hope you guys enjoyed this quick little video. Very informative, very quick. Thank you guys for watching.